Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings. Today we're diving into a Form 8K report. Prepare for some financial maneuvering because this one involves stock debt and a company trying to navigate the market. It's like a financial roller coaster. Scroll Form's talk. This report comes from IMAC Holdings Inc. It's a current report, which means it's detailing some events that recently happened, specifically on March 25, 2025. Let's unpack what those events are. Scroll waiver to amendment to common stock purchase agreements. First up, there's a waiver and amendment to common stock purchase agreement. IMAC Holdings made a deal with Keystone Capital Partners, LLC, related to buying stock. Keystone waived some rules about the stock's price. Originally, the stock to price up, Keystone is letting that slide. Also, they're expanding what counts as an eligible market to include some over-the-counter markets. Basically, the company and Keystone changed their original deal to allow the company to issue more stock. Even if the price is lower, this could suggest the company is having a hard time keeping its stock price up. Scroll amendments pulls to promissory note scroll. Next, the report mentions amendments to promissory notes. A promissory note is like an IOU. The company changed some previous agreements it had to borrow money. Specifically, they increased the amount of money they're allowed to borrow overall with these types of notes to $60, $49, $500. This means the company is taking on more debt. More debt can be good if it's used to grow the company, but it can also be risky if the company struggles to pay it back. Scroll creation tipped of a direct financial obligation rule. Speaking of debt, there's more. The report also mentions additional promissory notes. On March 25th, 2025, the company issued more promissory notes to some lenders, raising $84,000 in debt, though they only received $60,000 from the lenders. These notes are due at the end of December. Again, it is more debt for the company. Scroll amendments to articles of incorporation or bylaw scroll. Now, let's switch gears to something different, changes to the company's rules. Scroll submission cut-off matters to a vote of security holders. Scroll, the company held a special meeting where stockholders voted on some important items. Let's look at what was voted on and the results. Scroll 1, the Series G issuance proposal. Scroll P, the first proposal was about issuing more stock related to something called Series Preferred Stock. The vote was in favour with 336 votes against, so the company can move forward with issuing more of this Series G stock. This can dilute the value of existing shares because there are more shares available. Scroll 2, the Committed Equity Financing Issuance Proposal Scroll. The second proposal was about issuing more stock through something called Committed Equity Financing. Again, the vote was in favour with 357,550 votes for and 157,825 votes against. So this also passed. Scroll 3 and the authorised common stock. Increased proposal. So the third proposal was about increasing the total number of shares of common stock the company is allowed to issue. This is a big one, and it passed with 959,373 votes for and 229,315 turned HEE votes a die. Scroll 4 to the reverse stock split proposal. Scroll finally, the stockholders voted on a reverse stock split. This means the company will combine some number of existing shares into one new share. The vote was in favour with 900 and at 6. Can make the stock price look higher, but it doesn't actually change the value of the company. Companies often do this to avoid being delisted from an exchange. Because the vote passed to increase the authorised common stock, the company filed a document called a Certificate of Amendment with the state of Delaware to increase the number of authorised shares. Before, they were authorised to have 120 million shares of a common stock. Now they are authorised to have 120 million shares of common stock. Now they are authorised to have 120 million shares. In Scroll, view other things to note. Scroll on to March 19, 2025 scroll. From March 19, 2025, the company issued another promissory note to Jeffrey Bush in the aggregate principal amount of $16,500 for an aggregate purchase price from Mr. Bush of $15,000. This is another instance of the company accruing more debt. And now let's take a step back and look at the big picture. IMAC Holdings seems to be in a position where it needs to raise money. They're issuing more stock and taking on more debt. The reverse stock split suggests they're trying to boost their stock price, possibly to stay listed on the Nasdaq. The fact that they are leaning on stock and debt could mean the company is running low on cash. It also can mean the company is investing in something that will be very lucrative in the future. However, right now they need cash to grow defaults and increasing authorized shares, and the reverse stock split can be seen as a way to attract or retain investors, but it doesn't fix underlying business issues. Also, what does all this mean? IMAC Holdings faces some notable risks, mainly around managing its debt and maintaining its stock price. If they can't improve their financial performance, they could face difficulties down the road. However, the company also has the opportunity to turn things around if it can successfully use the money it's raising to grow its business and become profitable. In conclusion, this report paints a picture of a company that's actively trying to manage its financial situation. The moves they're making are aimed at raising capital and boosting their stock price, but whether they'll be successful depends on their ability to execute their business strategy effectively. Thanks for watching Corporate Decoder. If you found this breakdown helpful, be sure to like, comment and subscribe for more insights into the world of corporate filings. See you next time.